Welcome to Trading Lounge and the indices, and starting with the SP500 here, we can clearly see that we've got some sort of struggling top in here being reflected from this previous high over here. And yeah, it's getting a little bit sort of scrunched up there. So we need to sort of talk about this a little bit. Now, I'm thinking that that the trade that we're looking for will be this wave 2 here to the upside for wave 3. Now we've got this wave 3 and 4 here. It's not like I can bring wave 5 down on top of here and have it. I could have it as a truncated fifth wave, but it's probably not the case. So we'll still need to see further upside here, and I'm thinking that will sort of happen in that, up into Christmas there. So there's just a few different ways that we could count this particular top here, but what I'm getting from the stock market or the tech stocks is that well, there's two types of patterns really. There's Apple that's made a new high, and then you've got stocks like Nvidia, Facebook, Netflix, those sort of guys that have got, if I could just bring this over here, I think we talked about this yesterday, didn't we, a bit, but this is what do I call it, Facebook, Meta platforms, it's come down a long way, so it's got this A wave going on. I don't know if I need to put that in there as the B wave here. I thought we'd be pushing up a little bit, but it still could have an A, B, C and push up. But anyway, and that's not the point. The point being is that it's this wave 2 that I'm looking for. So Microsoft, Nvidia, Meta platforms here, those sort of stocks have got already this big move down here. Now, Apple made a new high, so we've got to put wave 1 up there for Apple, and it's starting its correction. But because Apple's quite strong, it means that the wave 2 will be quite small, and that's okay. So I'm thinking that we're in the B wave and going down for the C wave here, and this is the trade that we're looking for here, this 1 and 2 and then to the upside. That's the consensus that I'm sort of working with at the moment, but it is a little bit of a mixed bag, as I explained in the stocks. And to have such a small fifth wave here, it's kind of fitting with the extension in the first wave, and then wave 3 being a bit smaller, and then wave 5 here. I could easily put wave 3 on the top here. I could do that and put wave 4 over here and then have another move to the upside. I could do that too. So there's a few different scenarios here that could even go there, but it's a B wave in there. But yeah, so I'm thinking, that we don't have to do much here. We're looking for some sort of some sort of move down, and then the first impulse wave to the upside, and that's where we'll go long into this third wave here. That's the sort of game plan I'm thinking of here. Now the Nasdaq has taken out this top here, but the S&P hasn't. So that's one of the reasons why we can call this wave 1 to the upside and wave 2 here. Okay, rather than bringing wave 5 down to the top there. That's the sort of idea for that. So over the last week or so, I've just sort of mentioned there's not a lot going on in here, in this, and we're continuing to see weakness come into this market, and the jolt figures, the ADP figures last night, and the employment situation, or the non-farm payrolls, or whatever they call it, were coming out on the Friday and so on. So yeah, the ADP figures were less last night, which should have seen a bit of a rally, because like the bad news is good news, is that what they're saying, or something like that? Less jobs there. It's crazy worlds, but there you go. So that's that really, just sort of shooting the breeze really. Nothing, I kind of want to trade in line with the trend, rather than sort of against it. I mean, day traders and scalpers, it's every day's the same, you're just looking for setups, but I try to keep the video in terms of swing trading, try to get I don't even know what a swing trade is really, it's, a week, maybe more. I don't know, a trend, a swing in the market. So try to capture that. But coming up here, we understood. We were looking to take profit because we got most of it. But the rest of it's been pretty. It's been overlapping. All of this has been overlapping wave structures, suggesting, well, screaming that there's a top there's a top coming here, and we're kind of getting it. So I'm thinking this is it here in terms of an A and a B and a C wave here. Like I said, the irony of this is that I could easily be wrong, and this could be a wave 4 over here, and we'll still need to go one more high over here. I don't think that's the case, and it does appear that we are viewing a impulse wave down here, so a wave 2 and 3, 4, 5, something of that nature. So we're not sort of far off. I'm not that sort of I just don't like doing trading in corrections, because I mean, it's okay to do it, but I'm not there to sort of help with terms of stops and getting in and out and yada yada yada. So it happens too quickly. So but that's sort of it in a nutshell, I guess. So not a lot to do. Like I said, it does look like an impulse wave here. I look at this as 1 and 2, and then 1, 2, 3, 4, 5 the third wave, fourth wave, and fifth wave. So if I was going to short this, then, and I'm not, but you could, well, you'd need to be a little bit careful just in case this is a fourth wave down here and we get a fifth wave up here. That's the trick of this. So the way to dodge that bullet is let that finish down here, and then there'll be either wave 1 and 2, and then going up for 3 here. And if it fails, well, then that would be the short trade coming in under that low here. But you would also use the 50 here, the 45.50, and look for a classic trading levels pattern to the downside at that point too. You'd want the first low below the level for the short trade under here, and then bring it up to here. Of course, this move up here quite a lot of the time comes back above the level here, as you know, so back above the level, so then you got to rinse and repeat. But you can still just keep working up from the lows and then getting it, because you're trying to find that number's being rejected in the market depth, really. I mean, you can look at the market depth, but and trade from that and read from that, and that's all good. But it shows up, the volume shows up in the chart anyway. So so you'd want that sort of 45.50 there as a retested resistance. But looking at this here, we've got a little 1, 2, 3, 4, 5. So there's a bit more to come down on that. So we've either got that as wave 4 or 1 and 2 over here for that, just to look at both sides of it. So it just makes you, when you look at both sides of the market, it just gives you a more balanced view, and it also makes a safer trade for you, because when one is not right and the other one's there's only one left, so then you can move on that. So it's just it's not good to marry your own opinions, so just be mindful of that. But yeah, so we've been talking about the overlapping wave structures and the trend I call it creeping to the upside, and now perhaps it's we'll get that rollover and rebalance here. We could buy at the low here after 5 waves, but we'll try to get the first impulse wave. And the reason for that is that once you've got the first impulse wave here, and of course the other thing too is that there will be 5 waves. If it's going to be bullish, there will be 5 waves in this first leg here. You can get 1 and 2 in here, but you can't catch the end of the third, because you'll end up back in the red here. So we'll look for this one here, and if we've got 5 waves here, well, then we can buy, in that 50-60%, we can pick up a smaller position in there, and then build here, and then continue to build up here. And the reason for this is that if you've got that decent 5 waves there, then you know that you're going to get about the equal over here. So it makes your risk reward factor and managing the risk better, because you can pretty much get to break even at that point, close to it. So the risk reward factor gets better, the win-loss ratio is better, everything is better if you wait for the first 5 waves. Because basically, you know, we've had this big impulse wave up here, and we're just looking to buy the dip in a way, and we're looking to do that as professionally as we can here in managing that our exposure into the market. So let's see how it goes. I mean, a lot of the stocks are telling me that we can have a rally back up here first and then down. So it's a little bit. I don't really, you know, this here, we never got involved in any of this, and you know, and it's still not, you know, it's not over until the big lady sings, and yeah, so we'll see. If we get this, then we know where we are. If we don't get this, then we'll get this, and then we'll have to get, you know, this 5 waves down here. You know, it's something like that. But yeah, we're not far off now. You know, we've been patient all this time, and we want this is where we need to be over here. So we either come down here or we go up here and then we come down. We'll see. Okay, well that's it in a nutshell. Let's just go through it a little bit. So this is the Nasdaq here, and it's taken the top out here, and we can look at this also, you know, wave 1 here or wave 1 over here. There's a better case for it being over here in this instance. It's, you know, when I look at all the markets, it was only really, well, I mean, not all the markets, but just the handful that I track, the, you know, the, not all the biggest, but most of the biggest. There's only really Apple out of the half a dozen or so that we track that really made a new high. The rest of them have had, not all of them, but most of them have had a reasonably deep, you know, move down here. So that's kind of the consensus, really. So this wave 2 looks like it's on its way. And of course, you know, wave 2, at the end of the day, if you're using Elliott, you know, it can come back to, well, basically that's the 50-60% here. So it could come all the way back down there. That's the other thing about this. You know, so it could come all the way down here. I don't know that just yet. It could come down 40%, 50%, 60%, you know, it should come all the way down to 1 point down below here as well. So we'll just see how it goes. But the thing is that, you know, when we look at, I'm just using Meta because it's just here, you know, we need this leg here. So we'll just track that. And of course that could be there and so on. We'll see that B wave could be over here for this too, as an ABC for the A wave over here and a B wave here. And it's just a little bit early to figure that out yet. But it's quite possible that that's already done and dusted there. Otherwise we'll get that other option pushing up there. So, but we just need that other leg here, you know. So that's what we're looking at, really. So let's just go in here a little bit closer, and where are we? 1 day. Let's just go to 20k. As always, I'm not sure which charts I've updated. Some of them could be weeks old, days old, some of them updated. So yeah, this is the scenario here. We've either got wave 1 top here with an A and a B and going down for the C wave here, and this would be, you know, wave C of 2 over here, or we're going to push back up through here. See, pushing back up here was really just about these stock coming back to Meta's platforms here, just as an example. Like if Meta pushes up here, and this is a B wave over here and a C wave up here, that pushes up, well then what's going to happen here with the indices is they're going to push up, you know. It may push up that the B wave is just up here, or we push up for wave 1, you know. I don't think that's the case because Apple needs to turn at this point too. So so I think we're probably not far off here, but it does look a little bit impulsive here. So to have I know this is not very helpful, but to have a little ABC pattern here and then go down is quite possible, you know. We'll see. But this could be down for 1, back for 2, 3, 4, 5 coming down as well. So, but either way, we're not, you know, we haven't been ready here for ages. So, you know, we trade up to this number. So this what's going on here at the 16,000 really is just a classic trading levels pattern. It's this pattern here. So we've got the arrival, the reaction, the first high above the level, and now we're in this section over here. We're in this corrective section, and we need to be down the bottom here. You know, we need to be building in, get a couple of positions in here, and then building on the 16,000 and moving up at that point. So this is all of the arrival here, the reaction, first high above the level, the correction here. We could push up here, like I said. We've got those little 5 waves there. I'm just not quite sure about this, and normally I'm okay. I can sort of figure things out, but stocks, when they've been topping, we've got the leaders and followers, and there's just a mixed bag of things. It's a bit hard to get the consensus is that B wave is in here, but I can't really confirm that. I can't say that's that. Do you know what I mean? And I like to do that if I'm going to make a call, so I can't make that call. But as I've always said, we're looking for the top, and when we're looking for this, and in between all of this is going to be a bit messy, and we don't trade in group 1 and group 2 in the stages. If that's the top here, then we're not interested in any of this, and we're only interested in once the correction is fully developed on this side of the fence, and it hasn't fully developed. It can kick up and then kick down. Do you know what I mean? So we're not there yet. That's all it is, really. I don't know what I got on the 1000 here. Probably just a mess. This is it here. So looking at this as wave 1 here with an ABC. The other thing I don't particularly like about this situation, I suppose, is that as an A wave here, I would like to see 5 waves down here, but I've only got 3 waves down, so I really don't like that. That kind of telling me that we could be in a wave 4 here, because a wave 2 from 1 down to 2 should be 5, 3, and 5. It doesn't have to, but it's you're on the right track when you got that. But anyway, as far as the crow flies here, we've got little wave 1 here and 2, and then 1, 2, 3, 4, 5 for the third wave, fourth wave, fifth wave here. So we should get some sort of little ABC pattern here for wave 2, and then moving down from that point, and then you can look to short under here. Once that's triggered here, then you'll need to use your stop above here for that, above wherever that high is there, and don't put stops at whole numbers. But don't go jumping in early here, because this little pattern here is confirming what's going on at this stage. So I'm going to remove these, because I don't, they're just for day traders, not swing traders, trend traders, whatever. So let's just see how this plays out. And then we move over to the Russell. So with the Russell here, we're looking much the same with 1, 2, 3, and 4, and 1, 2, 3, 4, 5. So I could put this in over here and have that top there. That would be sort of what we're looking at. The only thing about this that I don't understand is that I really, this little move here was, to me, is an impulse wave. So I feel like this should be over here. I can look at that as an ABC. I could look at it as probably an A and a B and a C and a D and an E or something like that, and put the wave 4 over. I'm just not quite sure about this. And what that means is that I could end up having to drop that down here and drop that down to here, and then this would be wave 4 here and wave 5 over here, and this would have to go here, So there's that possibility to come into play, So I'm not quite. We don't have to do anything here. That's the point, basically. We've traded up here. We've had a few other I think we traded this one. I can't remember. Yeah, we did trade that, didn't we? We missed that gap, that's all. So yeah, let's just wait and chill on the Russell. Nothing to do, but basically looking at it as wave 1 and 1 here, and we'll look back for wave 2, and perhaps it has started, and that would be nice, but we're not ready there just yet. And that puts us over to the European markets, and the DAX has been moving along quite swiftly, and it's also, like the Nasdaq, has taken out the top here. But we're also going to look at this as 1, 2, 3, 4, 5 up here for 1, and the 2 here. So in this case here, it's kind of lagging. It hasn't really, it's still catching up to the other markets around the world. So yeah, we don't have any sign of wave 2 in here just yet, but we're looking for that sort of ABC pattern, and then a move to the upside. So we're not there just yet. Reminds me of the Dow Jones, actually, but quicker. So let's just go to the 1000 ticks here. So we're looking at a bit rough here, but 1 and 2 and 3 and 4 here. And from this wave 4 here, we're looking at 1 and 2, and then 1, 2, 3, 4, 5 here. I've got this over here because I'm thinking this is 1 and 2, 1, 2, 3, 4, 5. I'm not that interested in this little spike there, and 4 and 5. That kind of helps me sort things out with an A and a B and a C here, and 1 and 2, and 1, 2, 3, 4, 5 for third, fourth. I think we could have a top in here as well, but picking the top is a mug's game, and you can get embarrassed pretty easy. But it's not going to be far off. Even if we did have another sort of high here, it's not going to be much, you know what I mean? We still need this ABC for wave 2 here, and this 16.5 here is the lower end of minor group 2, or you can even look at it as a medium level. There's a couple of different ways you can look at it, but in one way or another it's still really important, and this is group 1 and group 2 above it here, and we want to see this play out here. Normally when it doesn't stop at a level like this here, the distance that goes up will be the distance that comes down, so it'll be back down here somewhere for sure. So that would be, there's only really 3 patterns, and that would be this pattern here where it doesn't stop at the level here, but it runs out of steam eventually and then drops back onto that and then down, and then it basically works its way into this number here, that's 16,500 in this case. So we'll get that bounce and this and that, and then we'll be off again at that point. It'll be pulled around by the US markets, by the S&P and so on. So anyway, that's where that is. Nothing to really do here. We've had some really good trades here. We've caught most of these trends up here. We had this one here. We had all of this here. I think I screwed that up there, but I wasn't expecting it to push up that high that quickly, but so it caught me out a bit. But anyway, 2 out of 3 is not bad. So that's the DAX, and the FTSE is a different beast. The FTSE is more in line with the Australian market on a sort of intraday basis, and here we've been looking at this particular pattern here as an ABC for the A wave, an ABC for the B wave, an ABC for the C wave, and a WXY here for the D wave here. And as I've been mentioning, we've always been looking for another little sort of push up. Well, from this point here we've been looking for a push up, and then we're also looking for another little push up there, and maybe that's it. Maybe we could put that, put this to rest now and put that wave Y on here. But I can't confirm that unless we get a drop below one of those daily bars there. At least there still could be another little bit of upside there, but it's very complicated this here. But what you want to try to sort of understand now is that, say with the DAX here, that's not the DAX, is it? That's it's the same thing, it doesn't really matter. So let's just put this in here. There may be another little high here, but it doesn't matter. But with all of these, with all the US markets, we're looking for this wave 2 here, this ABC, that pattern, this pattern here, right? So, and then up at that point. So this is what we're looking for here as well, a little ABC pattern, and then up, and you can take that through to the Australian market and probably many other markets as well. The question is that little top here in place? And if we go to the 1,000 tick area here and check on this, then look, it's really complicated, and but basically wave C here with a W, X and Y here, with another W, X and Y in here, and then I've been looking for 1, 2, 3, 4, 5 for the A wave, the A, B, C for the B wave here, and then the C wave here that's taken up the top. So there's probably 5 little waves in here. Yeah, I can see that. That's all fitting there. So that's 5 waves. But at the same time here, I mean, just to be clear about this, that 5 waves could be just wave 1 here and going back for wave 2. I don't think it's the case. It looks like a little 5 waves here, so it looks like we're going to get at minimum here, just by the by, 5 waves down, a little move back here, and then another 5 down. But you wouldn't want it going below the 61.8%, otherwise it's all doom and gloom for the UK market here. So it's already pretty much doomy, gloomy Sunday. Is it gloomy Sunday? It is PF. Yeah, I think it is. Nice song. So yeah, anything, this would be when you start seeing this 7500 here, then this is group 2 here, so the 80, 65 here and 72 here, so that will be your support in here. That's the skeleton of group 2, and if that becomes the retested resistance, this area here, then it's going to drop from that point, you know. So you can look for a classic trading levels pattern at the 76.52 short at this point. But it's probably likely to come through here, but it's not going to be quick getting through all of this here either. But it did make a new high here, so there is a case, you know, that we could put this in here, but I can't confirm that. Once, if this market drops below this level, you know, here, this group 2 here, or group 2 becomes the resistance, then it will collapse from that point. So we need to see this particular pattern here first. If that's 76.50, what is it, 76.50, whatever, I'll go back to it. You know, if we get the first low below the level from group 2, and then we get it breached at that point, if this gets rejected basically, then it's all done at that point. If that 74.65, if that gets rejected, then it's down from that point. So in terms of coming down here, we could also look for, take that high, low and high here. It's not a big drop, but we'll be down here somewhere for to finish that triangle pattern off here. So they'll be looking for something like that, you know, and that would reflect back over here on the daily chart, back over here with this dude here, this thing here. So yeah, and I put a little trend line through here to clip into that there, and we'll look for that 50-60% retracement level and all of those things. But you can't trust 61.8% in triangle patterns. A lot of the time it's more like the 78.6, but anyway, that's the 78.6. So yeah, there and there, those two things will just keep. It doesn't really matter. We'll get there anyway. We'll get there in the end. But that's where we are within this larger pattern. So we're going to have a look at the Australian market, and this will be kind of the FTSE and the Aussie market kind of do the same. It's slightly different patterns, but doing the same sort of thing. So yeah, so we've been looking up here as from the low here, we've been looking up as an ABC for the A wave, an ABC for the B wave, and I probably need to look at this as a WXY here, but before I want to make sure before I change that. But I've got here as all the way up for an A wave, a B wave, and a C wave here. Now I could put the top in here, I guess, and call that top in here for that. That's doable. But also just and the 72 is really important. This is the balance line through this whole correction for a long time. It's the old COVID high, so it's really significant. And we're actually in the bigger picture, sort of working into this number. But we're not ready to do longer term long trades. As I mentioned with the FTSE and you know, the US markets have got to have this ABC pattern here. This is where this comes in, an ABC pattern here. So we've had this as wave D up here with an E wave, but I wanted to talk about that again, and I'm just going to go to the daily chart here, because I'm going to have to kind of expand that up. So just want to talk about this for a second, and I'm only just shooting the breeze here, okay? So it's just open for discussion. So before we had this here as the D wave going up here and the E wave here, okay? That could still be the case, but I was just giving this some thought, and I was thinking to myself, okay, so let's go back to the Nasdaq for a moment, because they're kind of leading to the upside, and let me just get in this. Let me just get to a daily chart, and then I'll just bring that that daily chart over. Okay, so I just want you to think about this for a moment. So with this Nasdaq here, let's just assume for a moment that this is correct, right? That we actually have 1 here, and then 2 here, and then 3, 4, and 5 here, something like this, to make this wave 5 here of 1. And then we have a larger A, B, C correction here for wave 2, and then go up at that point. So this comes over to here, this is here, B wave up here somewhere. So something like this. It doesn't have to be that big, but basically we need to push up here further, and then we need to come back down. So how would that reflect over here? So I was thinking about that, because we're also a bit like the FTSE in a big triangle pattern here. We'd have a look at that. So I'm thinking that, this particular top here as wave 1 would be the A wave over here, right? Which we can put in play here now, okay? And then we've got the B wave pulling back. So the B wave would be wave 2 sitting here. And then we're going to push up for wave 3 and 4. So that means that pushing up to wave 5 up the top here would be pushing up to wave D here. And when we've got wave D in here, or wave 5 here, would have an ABC coming back. They would have this ABC coming back here. For this wave E, we can just drag that down or do whatever we need to do, but that type of thing, Not sure how big that will get, but it doesn't really matter. But so this here that I'm drawing out here would suit this, would move in with this market here. So I just wanted to sit with that for a little while and mull it over. So that's what I was sort of thinking. So, because in the bigger picture here, if I had this as wave D here and wave E here, the problem with that to me was twofold. It doesn't fit the US count, and also it's a little bit small as well, especially when I consider I know a triangle pattern here, the A wave would be the bigger one, and the B wave can be, if that's simple, that will be complex, so they could be, quite gnarly as well. And then this one here, so basically the A, the B, the C, and then the D, and then the E over here. It's a bit more in proportion, isn't it, rather than this little one in here. So I'm just going to remove these here for a while, and we'll just play with this one here, and we'll just keep talking about it and those sort of things, and see how it goes. But once that's finished here, we should see that push up there. There's not a lot of difference, looking at this as a wave 1 up here and a wave 2 over here, because that's the other count that we've got. So if I go from 1 day to 20k here, where we've got the more bullish count, and this would sort of suit, it would suit a lot of the base metals in the market, basically. And look, I have to say the banks have got these as well. I mean, this type of pattern here, Westpac have got this pattern. I did have Westpac here somewhere. This is Westpac here, so it's kind of got that sort of pattern here where it's, we talked about the banks pushing up with this market, but I won't go into that at the moment, but same sort of thing. So this would be the bullish count here, where we look at this as over here from the high over here. It's an A, B, C, D, and E here to have that finished. At that point, that's a low, that could be done. And then looking at this as 5 waves here, then an A and a B and a C. The only reason I don't like this is this ABC is really big compared to wave 1 here. Still doable, but it's kind of like, okay, well, we'll just leave that box unticked for the moment, because it's not doesn't have the right look and feel about it. But it's all there as an A and a B and a C wave, and that means we'll look at this as 1 and 2 and 1 and 2 here, and then look at this as more bullish pattern here. But it's possible to view it in this particular way, and that means that we'd have to sort of tie this in to this market. So if this market was going to have 1, 2, 3, 4, 5 up here, then we'll need to try to sort of figure out how I can count. I can't really count it that way, but it may be possible. I'll just see how it unfolds and develops. We've got it there. We'll just keep an eye on it. We'll see how it develops in all of this. This is the 61.8% here at 72 from this top to this bottom. This next one here is from this top over here. So just two important levels, but we're deep into supply level here. With all of this. So it's kind of the balance point of all that big correction and the old COVID high and all the rest of it. So we can view it as a bullish pattern, but it's not our primary count at this point. So we'll just see how it plays out. Okay, so where were we? We're on 1000 here. So yeah, so we'll probably need to call that in here now. That it's not a great fifth wave, but and Thursday's got a bit of a habit of being bearish here. So we're at that 38 point. So it could be a wave forward to that point, but I have to say it does look a little bit impulsive to the downside. So what you could do here is look at, well, I'll go in and check in a minute. We could look for a little ABC pattern here and then, because if it goes past that, then that would be the short trade at that point. But let's just sort of take a closer look at this. Let's go from 1000 ticks into, say, 20. Let's just get a good grip on this top here. So, okay, well, that's definitely an impulse wave to the downside. That's like textbook stuff, isn't it? Well, not quite, actually. That'd be 1 to here, and then that would be 1 and 2, 1 and 2, 3. So all that's 1, 2, 3, 4, 5. So all of that's the third wave here. Third wave, third. So that there is connected to that one. So that's all the third. Oh, yeah, no, I'm right. So not being righteous, but just understanding if you're right or wrong in this game is important. So that's a nice A, B, and C wave up there. So that's 1, 2, 3. This is 4. And 1, 2, 3, 4, 5. I don't know. We're nearly there. What number we got over here? The 60. So that means, is there anything else in the way here? No, that's all good. That's not a B wave. That's also 5 waves up. Yeah, that's all good. So that would be some sort of A wave, B wave, and C wave coming into play here. So we can also use group 2 here. So 60, 65, and 70, 72, close enough. So that all of that is group 2. And 72 up here. Let's give that a bit of definition. And then the next level down here is the 50. And then 30. Okay, so we should see some sort of retest of that group 2, but fail at that point. And this is what we're looking for on a short trade, is looking for that 65. Well, basically, if this group 2 here becomes the resistance, what it's telling you is it's telling you that the number 72 here is being rejected. So we'll be looking for some sort of little 5 wave. That's like wave 1 there already. So 1, 2, 3, 4, 5 up here, and then this, and then this, and then this. And this is where you can capture it over here. So how far, you could sell it back up here as well, by the by, based on that nice 5 wave structure here. So you could get a smaller position in this consolidation space here. There will be a classic trading levels pattern at the 50, so there will be a bump in the road there. You might want to take some money off, depending what you are in terms of a scalper or a day trader and those sort of things. And then there will be another bounce. There will be a small bounce at the 40, but nothing to worry about. The 30, this is where it all starts to get a bit 10, 20, and 30 into this one here. That's what you want to be trading to. Yeah, so that will take us, this is already at the 38.2% retracement. So this is not a wave 4 here because it's 5 waves down. The time that it gets the retracement here and goes down is going to be past the 38.2%. So we can call that wave 4 into place here, and then that will take us down here somewhere. So we don't need all of this. Sorry to rabbit on a bit, but yeah, I can at least get you down here somewhere. You just need to also note where that 50-60% is here. So yeah, so that's 2 and 3. So this is where it's going to get a little bit tricky in here. But what you kind of want to do here too is that this is where all of wave 4 is going to play out here, then wave 5 here, and then probably an ABC pattern here, and then down again at that point. So for short-term traders, getting down to 71.30, 71.20 would be about as much as you'd want to sort of, you know, suck out of that trend. And then if we do get a clear 5 waves here, we'll look at shorting it over here as well. That's it. Alrighty. Sorry to waffle on so much. Cheers.